Being an international company with a huge portion of its supply chain, actual factory production, and its customer base located around the world, if we Tesla shareholders want to be truly informed about the future of Tesla, it is super important to look beyond the cool cars, the specs, and the estimated sales numbers if we want to truly understand the company and the stock. As we've seen so clearly in the past few years, it doesn't take much to change the market's mood. Did I say past 3 years? How about the past 3 weeks? This is Randy Kirk. Please hit all the things you know what to hit. Do I have to? No, you don't. You know what to do. And then, but apparently, you're not hearing me with regard to Patreon. I really, 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 I know you can afford the $5. Some of you can't, but some of you can. And this would be a really good time to just pop up there, take a look. Take 7 days free. Maybe you want to get a free book. If you stay on for 3 months, it'll pay for the book. Okay, anyway, let's look at it. We have just taken a deep dive look at Asia and its impact on Tesla now and in the future. If you didn't take a look at those 4 videos that we did about Asia, India, and all of that territory, including Australia, you really should have. And I'll put a card up later for the summary one that we did yesterday morning with Larry. But anyway, it's really, really critical. Very, very, very good stuff from those guys. Now, I've spent many, many episodes dealing with the US and the world economy, in particular regarding inflation, interest rates, the possible credit bubble due to the huge needs of the Treasury right now to issue bonds, and in the future, probably, undoubtedly. Well, there's other big international financial issues coming this winter, okay? All of those are directly related to Tesla's health and the growth of both the top and bottom lines. So first, let me be clear. Tesla is better situated, better positioned than any car company to deal with any future issues that might arise, with factory capacity now spread around the world and more capacity being added in even additional countries. So Tesla is reducing its risk of any one regional issue disrupting production or sales. And while we live in an interconnected world where China's woes last week affected the US stock market and Tesla stock prices very specifically, I make the argument that Tesla's in a great place to deal with China's financial woes, supply chain issues anywhere in the world, and even a worldwide recession. This is because the company is flexible like no other company I've ever seen. They can shift any aspect of the supply chain quickly, and they can ship cars to those places that are willing to pay the most for them. They have massive cash reserves and no debt. They have dozens of levers that they can pull to keep factories running and more dozens that they can pull to reduce output without dramatically impacting the bottom line. With no unions or dealer networks, the company has the ability to move quickly compared to any of its competitors. So this morning, I took a deep dive into the commodities with a specific eye to how prepared the world is for the coming winter, given the Russia-Ukraine situation still raging. Of course, wheat, corn, fertilizer, and natural gas are the leading issues, with oil also of some concern. The impact of shortages would have its most immediate impact on inflation, but there are also very human issues that could be part of that equation. Moreover, serious shortages in any of these commodities will cause resources to flow away from normal efforts to become as productive as possible in those regions that are impacted, in particular Europe, but it does affect us as well. So first, natural gas. What is the situation with natural gas? Europe has created regulations last year that have resulted in a 10% drop in demand. Now, some of that drop in demand could be all the electrification that's taking place, all the use of solar and wind and batteries that's happening in Europe. But overall, they have a 10% drop in the demand of natural gas. These rules now have been extended through the 2023 season, so they might see even further drops as their electrification program works. Many more solar, many more wind projects, many more batteries going in place. At the same time, the EU so the EU has 90% of its storage capacity filled. That was their goal, but it was a goal for 2 months from now. So they've already met the goal 2 months early. The result is natural gas seems to be okay. And as the result has been, we've seen stability in the commodities market with regard to natural gas pricing. Natural gas could have been going up all summer. Well, when I say all summer, most of July and part of August, with oil going up. Sometimes natural gas will follow because they're substitutable in many applications, but we have not seen that happen. Natural gas has fluctuated, but overall it's way down compared to last year and even has been down this summer. All right, let's go on. Fertilizer. What about fertilizer? Well, fertilizer is in even better shape, even to the detriment of those that are in that business. Prices have fallen to lows not seen since 2004 due to supply being in such great shape. So now that fertilizer cost and the low cost of natural gas and the lowering cost of all electricity because of all of the efforts that are going into solar and wind and battery storage, all of these are all going to be positive in terms of overall inflation. What about the harvests? Harvests are in great shape internationally, with the exception maybe of rice, which had some problems with regard to some China floods. But wheat and corn, all at great levels. Soybean seems to be very hard hit, very low prices on soybean across the board. I didn't go into a tremendous amount of detail on this, but I can tell you that overall, the farmers are complaining that the prices are too low. All right. So at this moment, the most troubling issue is oil, which at this point is mostly unrelated to the Ukraine war. The embargo on Russian oil might have created a problem, but the allies were supposed to stop buying from Russia because of the Ukraine, but Russia has found ways around that through China and whatnot. The truth is, Russia joined OPEC and Saudi Arabia in cutting a couple of months ago, which is one of the reasons oil has gone from 76 to 82. So this is not working. Russia is actually wielding some power there because their slight reduction is just one more thing that's propping up the prices. So what was supposed to hurt Russia is actually helping them right now, but only truly because of Saudi Arabia. And it is, I can't say this enough, it is truly sad that the U.S. government, that the leadership in the U.S. government cannot get the Saudis to cut this out. The Saudis, of course, they recognize that they want to raise the price as much as they can without killing the golden goose, so to speak. They don't want to destroy the U.S. economy because we're their biggest customer. But they do want higher prices, and they can get that by reducing the total supply right now, which they have been doing. One way or the other, this needs to stop, but I don't think it's going to get worse. I've said that a couple of different times in a couple of different episodes recently. I could be completely wrong, but I think the $82, $84 price point is probably where we're going to be staying for a while. Hopefully it'll go down. We'll see. So conclusion, short of some huge, and this is a long conclusion, okay? Sorry. Short of some huge unexpected event, commodities seem likely to help, not be a hindrance to the overall inflation issue through the next several months. Oil could be an issue, but I don't think that's going to happen. So I think they'll stay at 80, as I said before. That's just me, could be wrong. So where does that leave Tesla? Number one, commodities going lower has to be arriving in cost of goods for Tesla. Everything from oil to steel to copper to transportation is down. Jeff Lutz has repeated just a couple of days ago on Friday with Herbert that the cut in costs should definitely be showing up in the coming quarter. So cut in prices that we've seen, which are minimal, while cuts in costs could be substantial. I'm looking for over 20% margins in quarter three. That's probably putting me high compared to others, but I'm thinking with all the things, all the positive things that we have to look at in quarter three with regard to margins, I think we should be over 20% again. Number two, if inflation remains under control or gets under 2% consistently, the Fed can be done raising and might even start to cutting interest rates. This would be very good for the economy and therefore demand for cars, and it would be good for the monthly cost of ownership, therefore creating more demand that way. So that would all be good. Three, if the stock market gets optimistic about the economy and interest rates, the bull can proceed. The market was very optimistic until just a couple of weeks ago when we had the Fitch, the Moody, the Fed minutes, all these darts put some holes in the story. Patch those up and we're headed higher, barring normal crises getting in the way. So that's how I'm looking at the overall situation with regard to commodities, with regard to the winter coming up, with regard to Russia, the Ukraine war, etc. If you have comments or thoughts on that, love to hear your comments and thoughts. You know, I try to answer as many as I possibly can, especially if they're detailed and you give me something to chew on, as opposed to saying, you're all wet, Randy. Okay, let's talk about the 3 episodes yesterday. In my humble opinion, those 3 episodes were really, really good, informative, useful for you if you're a stockholder, for you if you just love to follow Tesla, for you if you're interested in how Elon thinks, etc. So you may want to go back and take a look at those. In the morning, we had Larry Goldberg summarizing and ending the series, the 4-part series on the Asia markets, including Australia. That series was absolutely incredible. I learned so much. It was super helpful to me. I would encourage you to go back and listen to all 4 of them, but if you can't listen to all 4, at least listen to the summary that I did yesterday morning with Larry. The card is right there. Number 2, yesterday in the middle of the day, I did one on Cybertruck margins. I believe Cybertruck is going to be a net benefit to the overall margin picture in 2024. And I explained why in detail. And I'd love to hear what you think about my explanation, whether you think I'm all wet. I think I'm the only person saying this, or at least the first. We'll see, other people may follow. And then number 3, we had a CATL breakthrough yesterday with regard to batteries. That was my hot news, but there was lots of hot news in my news broadcast yesterday afternoon. So that card is right there. So all 3 cards are up. If you can't find the cards, or if I blew it or whatever, easy enough to just go to my channel and see the last 3 things that were put up. All right. If any of this that I do is helpful, please hit like. It helps the algorithm. It helps it get out to more people. It helps me to see that I'm doing the right thing and that I should continue to do more like this. You could even say in the comments, Randy, yes, overall, I like what you're doing. Had somebody yesterday say, well, Randy, I really just want to hear about Tesla news. I'm not interested in what's happening with the overall market. I'm not interested in what's happening with interest rates. I'm not interested in what's happening with inflation. I'm not interested in what's happening in Asia. And I'm like, okay, fine. That's not my channel. My channel is, I am trying to be holistic and bring all of the information that is really solid to you with regard to every aspect of how you're making a decision to invest in Tesla. Even though I'm not an investment advisor, what I am is I'm a historian. I have a huge background in law, huge background in business. I've written books, as you know, right here on economics. I've been published in Inc. magazine. Inc. magazine loved my book When Friday Isn't Payday. I mean, I could just go on and on. I'm not trying to brag. I just have a lot of experience, and I'm trying to share that experience with you in a holistic way. If you want to just hear the news about Tesla, there's a couple of different channels. I love Dylan. I love Rob. Those are great channels for the news. If you want to get crazy, every single lab report that ever came out about some breakthrough, go listen to Sam. There's lots of people doing other things besides what I do. But if this is not what you want, and you think I could do it better, then I'd love to hear in the comments. What would you like to see me do better, or do more of, or do less of? If I hear from a bunch of people all saying the same thing, I got to take that into consideration, right? Okay, so that's all I got, except for, a little suggestion that maybe Patreon would be helpful. Okay, that's it. I'm out of here. It's been great. Got to go watch the hurricane. Oh, yeah. I'm recording this on Saturday night as the hurricane is starting to come in. Bye for now. It's been great talking to you.